Are you spending thousands on medical stuff only to find out it didn't help your taxes at all? And no, there's probably nothing wrong with your return. You just haven't been told how medical deductions actually work. So today I'm going to explain medical deductions in plain English, including those things people buy every day and the stuff you see on TikTok that people think is deductible, but probably isn't. If we haven't met yet, my name is Nixon. I am an AFSP tax analyst here in Houston, Texas, and I help high-income earners reduce or eliminate their taxes legally. This is Tea on Taxes, where I spill the tea on all things to do with your taxes. So here's the part that no one explains up front. Medical expenses are not a guaranteed tax break. They're part of the itemized deduction formula. So what this means is, if you're taking the standard deduction, which most people do, your medical expenses are not going to change your tax bill at all. You can only do one or the other. You can't do both. And this is where most people get tripped up, because there are also two different systems that everyone seems to mix together. There's the medical deductions on your tax return, which goes on that Schedule A because you're itemizing. And then there's the medical reimbursements that go through your HSA and your FSA if you have a health savings or flexible spending account with your employer. Now, each one of these follows different rules. And the CARES Act actually changed one of them, but it's not the one that most people think. So if this ever confused you, it's not a mistake, it's just the math. And the math really starts with one rule. First, you can only deduct the part of your medical expenses that goes over 7.5% of your income. Let's use some easy round numbers to help you wrap your head around this. Let's say you make $100,000. Now, 7.5% of that $100,000 is going to be $7,500. That means the first $7,500 of medical expenses that you incurred are not going to count at all. You can't count them at all. Only the first dollar above the $7,500 is even considered. So if you spent, let's say, $7,501 total, your actual deductible portion is only $1. Not the $7,501, $1. And that's why the deduction feels so incredibly disappointing, especially to so many people who have high medical expenses. So nothing is really wrong. It's just misunderstood. And on top of that, not everything medical even qualifies. The IRS has limits on that too. So some common expenses do qualify, like doctor's visits, your dental and orthodontic visits and procedures. Most hospital bills are going to be covered, except those cosmetic ones, unless it's to repair something from like a breast cancer surgery, or like if you had like a fire, things to repair from an accident type of thing. Those would be covered. For prescriptions, therapy for a diagnosed condition, that's including physical therapy, glasses, contacts, hearing aids, and even the batteries for the hearing aids. Basically, if it treats, diagnoses, or manages a medical condition, you're in the right lane. One important note is that medical premiums that are paid through your employer are not deductible. But those Medicare premiums that you pay through Social Security and many of the private insurance premiums that are paid outside of your employer when you don't have an employer, so if you got private insurance, those can be deductible. So now let's just talk about some real life stuff, okay? These are things people buy typically every day, and they actually forget to track. So like your contact lens solution, breast pump equipment, condoms, yes, medical mileage to appointments, you want to calculate those, parking and tolls for medical visits. None of these are flashy, but over the year, they really add up. And if you don't track them, they disappear at tax time because you basically forgot about them. Now let's clear up some confusion around the over-the-counter meds, because most over-the-counter meds actually don't count for the Schedule A medical deductions unless they are prescribed. However, because of the CARES Act, many over-the-counter medications can still be paid with things like your HSA and your FSA. And this also includes menstrual care products, you can use your HSA or even your FSA to purchase your menstrual product. And that part is huge. But this is important, and it only applies for a reimbursement account because it doesn't automatically make those items deductible on the tax return. So there are different rules, different buckets. Just keep that in mind. Now, let's talk about the stuff I see online all the time, like the Apple Watches, the fancy beds, your kitchen and bathroom remodels. Here's the rule that matters. The IRS does not care if something is good for your health. They only care if it's medical care. And Apple Watches, in most cases, no. They're usually considered general wellness devices. And to be even considered medical, they need to be primarily used to monitor or treat a diagnosed medical condition. And that's with documentation. Same thing for like an Oura ring. It needs to be treating or monitoring a medically diagnosed condition. So if your doctor prescribes it, then yes, okay, says, hey, you need to get this, then say, okay, write me a note for the IRS so I can get this and deduct it. And even then, dual items tend to be very hard to defend with the IRS. That's why most doctors won't even prescribe it. They'll just give you advice to get it. The next thing, sleep number or like a Tempur-Pedic bed. Now, a nicer version of a normal bed is still considered a personal expense. For a truly specialized medical bed that was prescribed for a medical condition, that's a totally different conversation. But I want to sleep better because I got sleep apnea. It's not medical care in the IRS's eyes. Again, get a doctor's note. And either way, it's going to be difficult to get those two items covered. Kitchen and bathroom remodels. This one I see causes the most confusion for people. Now, a normal remodel for like comfort or resale, that's just not deductible. No. However, there are certain medical modifications that can still qualify. So think about ramps, widened doorways, or accessibility changes, like lowering the counters for someone who is permanently wheelchair bound. And even then, if the improvement increases your home value, the deductible portion is going to get reduced. So no, the entire remodel is not going to be deductible, but part of a medically necessary modification actually might be. So now you're probably thinking, what do I even track? Okay, you're going to want to track what you paid out of pocket, who that expense was for, and the date and purpose. One thing to note is that an EOB that you get from your insurance company is not proof of payment. You need the original receipts or the invoices because the EOBs only show what might have been paid. It doesn't show exactly how it was paid. And that's important because anything that was paid with like an HSA or FSA funds, they can't be counted again because you already took that tax benefit when you had the funds excluded from your income. You're also going to track things like your medical mileage with your dates, the miles, and the purpose of the visit. And you also wanted any doctor documentation for those special items like the Oura ring, the Apple Watch, the bed, any doctor documentation for any special items that you get for your home. You want to make sure you keep all of those documentation and always, always, always keep your receipt. You don't really need spreadsheets. You just need to be consistent. You can stick all of this in a little packet and just hold it all together. And if you ever need it later, when it comes to tax time, you can add it up then and see if it works for you. Medical deductions aren't some loophole because they are definitely not guaranteed, but they are a tool that you can use, and they only work really when the math and the timing lines up. If this helped you understand the difference between deductions, reimbursements, and some of the myths, please hit that like button below and make sure you're subscribed so you don't miss the next tea on taxes. Keep on sipping. Bye.